Michael had asked, radioactive trades are mainly bullish. Do you ever start one with a stock that is momentarily going down? I know I have, but it's very infrequently. I tend not to cherry pick. I don't mean cherry pick, that's a bad term to use. Bottom feed is the term I'm looking for. Even if I have a strong bullish outlook going forward, typically I take 99% of the trades that we post in the Fusion portfolio from this default radioactive screen. Okay, maybe it's 95%. I know sometimes I skew off of it. NEM, the Newmont mining one, was one I used one of my own personal searches for to identify. And shortly after I opened the ANET trade, which came right up from the married put screen that we're looking at here, the default sorted by earnings per share growth. And one of the defaults here, criteria that's listed is looking for stocks that are above the 50-day moving average. It could have had a pullback recently, of course, Michael, but still be above the 50-day moving average. You've heard me mention before, perhaps, some of you, I'm not saying Michael directly, but at times when the market's been down and the market sentiment switched to a very bullish buy indicator or a strong buy indicator, I ran the married put search and opened 1 or 2 positions in a 1 or 2 week time period because that's my sort of indicator that the market is going to turn in the next couple of weeks. I don't think the Newmont mining position that was opened on September 30th was based on that. I can't remember because August 15th, I think, was the changeover to a very bullish buy, or I have it reversed, and August 15th was the bearish sell, and it triggered a very bullish buy later. Let's see how far I can go back here without the history. Oh, okay, it was. Okay, so the Newmont mining position and the ANET positions, Michael, I opened at the time were because we started seeing very bullish buys, and I wanted to jump in at that time for a change in the market in a bullish position, but protected because all of 2022 was fairly uncertain. If I could go back that far, yeah, it was August 15th and 16th when we started to get the bearish sell warnings when we were up at 43.05, and well, we know how that panned out just a little bit later, down to 39. Down to 4,000, 38.73, 38.55, 37s, 36s, and that's what started to trigger the very bullish buy. The cycles there in that time. I ran a couple of researches, a couple of presentations. The last one I did it's overdone. I did it about 3 years ago, maybe 4. But what I did from time to time is I did something called Trust the PowerOptions search. And this is a Blueprint Owners Only webinar that's shown from a few years back. Oh, yes, it's Trust the PowerOptions stock search, and there's other ones that we did. What I did in that specific search, Michael, is I took the default married put results, went into the historical screen, ran the search, and took the top 3 results, not as a married put, but just looked at the stock change that happened in the first 3 months, 6 months, 9 months, and 12 months from the results that came up in the search, using our preferred criteria and our preferred stock list. And then I changed it to look for the same type of married puts, but just on stocks that were in, say, the NASDAQ 100, the S&P 500, stocks offering weekly options, so on and so forth. What's not shown here is there were other lists that I used in my personal account for bottom feeding stocks that were in a downtrend below the 50-day moving average, riding the lower Bollinger Band, and had a negative MACD. And the idea was to bottom feed for cheaper stocks that were depressed. Well, I've done this comparison, Michael, about 3 times. And the last one I mentioned, there's one actually, I think, after the one that's posted there in the members only content at Radioactive Trading. But each time, the stock performance alone by itself in the first 3 months, 6 months, 9 months, and 12-month period for our preferred search outperformed the same stocks that would have matched our married put criteria against the S&P 5-star list, S&P 500, NASDAQ 100, bottom feeding using other strong technicals for bullish, such as MACD and so forth. It just seemed to perform better. I had a question a couple weeks ago, will you ever change the criteria? If I run one of those comparisons and I notice over a 1 or 2 year period that some criteria that Ernie and I developed for the underlying stock criteria outperforms the stock performance of what we're doing right now as the default, we might make a change or two. We haven't seen that happen yet. The bottom feeding ones did not perform well. I don't mean to sound negative about this, and I'm not trying to trash another company because I know they've been very successful. The worst performing one, for some reason, of the stock performance of positions that would match our married put structure, maybe that's part of the problem, is that in that particular stock list, the ones that have the risk of the desired, 4 to 8.5 or 4 to 8%, Michael, the value line list always performed the worst. I don't know why. I know people are very successful with those lists. I have subscribers to PowerOptions who subscribe to Value Line and import some of their different lists to run their screens against for naked puts, covered calls, collars, even married puts as well. And they do well. But just for whatever reason, each time I did that, the lowest performer was one of the Value Line lists that we have in that main list field. Maybe we don't have the updated ones. Maybe we don't have the best lists. I'm not sure, but it just staggers me that it's always that one. There's no rhyme or reason to it. But in any case, the three trades I opened. Let's take a look here. I don't have them updated in the portfolio. It might take some time to share that today. So let's start off with the newest one. Charles Schwab, directly from the search on December 27th. Let's go to the charts here that I like to use. It's going to be a 3-month chart. We're now going to knock that down to a 1-month chart. And I have MACD and Bollinger Band selected. And 1227, we had moved above the SMA 20. Oh, and there's discussions on this in the webinars, why I chose this. Just had a positive MACD crossover. This was the entry date, had moved above the SMA 20. And that's where it was. Can I say that here was a better buy point for Charles Schwab? Yes. But again, a lot of times, Michael, when I run that screen for bottom feeding, 60 to maybe 65% of the time, the stock continues to move down. Doesn't continue to move up in the popular trend or stabilize necessarily. I'm usually looking for something that's shown me a positive view coming off of the bottom, and that's what I looked for in this particular trade. So not bottom feeding, although it did have lower, and hindsight 2020, any one of us can look back now and say, you would have had a better married put and a higher profit today if you got down at this bottom here. You're absolutely right. But consistently over time, that's more of what I'm looking for. Let's go to NEM, Newmont Mining. Let's go back to the 3-month chart. If I'm not mistaken, this is one that was opened on, it's either October 4th or September 30th. This was the one that was opened on September 30th. I'm going to have to go back. Let's do a custom one. Let's do September 30th. I want a little bit more time than that, don't I? Let's go to 9/20 to today. All right. Now, this was sort of a mixed bag. Here's the 30th, this line right here. And what do we have for our stock on the higher range? All right, so when I got into Newmont Mining, why did I start opening new married puts? Exactly what I said. The bullish buy started to trigger. Things were down and depressed. But again, this one was depressed here, but now started showing 3 to 4 days of moving up. Here's roughly the trade entry. And I got psyched out and psyched out again, but I actually did income methods here, here, and here. And I just did 2 recently again, Michael. This position is now bulletproof with an infinite upside profit potential with the income method number 6 trade. So I was able to withstand, of course, all of this from when I initially got in because of the protective put in place. And keeping this same time frame, let's go to Annette, which has just been a wild ride, but it's been a lot of fun. There are opportunities to make a ton of money on this to the downside. I didn't, but I could have twice. In any case, when did we get into the position? Around the same time. It was right about in here on October 4th. Make sure I got that number right. I know it's October 4th, but I want to make sure I have the right line here. There we go. Sorry for the scrolling, folks. This trade was entered right around in here. Again, similar pattern. We'd come back up off a bottom, 5 to 7 days of upward movement, started to see a reversal, and then it fizzled out. Tech fizzled out on me. Then it started to come back up, and then we get this jump, which I was believed due to earnings. Income methods here, here, maybe here. I think close to there, close to the top of this last one, or it might have been here. It was one of these two. And now we're just plummeting here. You can see it. I'm from the high of around 142 to here. This is the ugly of the three, the good, the meh, and the ugly I was talking about for the RPMs I'm in to the start of 2023. There's still adjustments that can be made on this position, but it is down roughly 22% or close to $32 from its recent high. Kind of a killer. Keep seeing this in my head and this. And I say to myself, why didn't I do income method number 12 at this point, which would have allowed me to profit in both positions? And I think I'd be at a 7% return profitability on this position. No, it'd be a 9% return on this position right now. As it is, I'm at a loss of only 1.4, 1.5%, and the maximum loss is 2.4% on this trade because I bought in here. I'm sorry, no. Yeah, I was right around it here at 120.47, and the stock's down to about 112. So that's not really too bad at all as far as a decline, but I have adjustments I can make on this position. Just haven't done it yet, but we'll get to that discussion in that presentation. Probably sometime next week it'll be posted. Since we've already talked about the good on NEM, you'll see the meh on Charles Schwab married put that's in the Fusion portfolio. But Michael, that's my thoughts. They're bullish positions. I don't usually start one when a stock is momentarily going down unless it still matches the criteria. And some of these are, by the way, going to be negative. I can guarantee that. Where is let's go back to the search. Box is one. That's Ernie's trade. Ernie opened this a little while ago. It's still on the list. Good married put structure, following the rules. And as you can see, it's come off its top, been down a little bit, had a Bollinger Band breakout, but now it's sort of collapsed and the MACD is negative. It's below the SMA 20, so I don't know if I'd enter this one particularly. I don't remember which time Ernie entered this trade. I think it was around the same time of that beginning of October. It's probably in this range. I thought he paid $30 for it, so it might have been around this range here. We can look that up later. But that's one of the recent married puts that Ernie opened. Although it matches the search results, it's still above the 50-day moving average. I don't know if I like the direction this is going right now. If I maybe see it bottom out and I still like the stock, what I mean by that, if I start to see something along the lines of this and I start to see a little recovery, maybe then I'd enter here. Is it the best price? No. But I don't necessarily want to force myself, Michael, to time trades. As Kurt always says, don't time your trades, trade time. Of course, he's talking about manipulation of the 3 core principles of radioactive trading, in addition to forcing an ideal size trade, the at-the-money bell curve, and then, of course, the time decay or radioactive decay line, swapping that with the puts as the stock moves up and down, or doing the other income methods. Generate income shorter term, keep the protection longer term, be able to swap that time premium out as well. Okay, so that's just my thoughts, Michael, and I hope that answers your question in general. I'm not saying I'm right 100% of the time. I'm not saying I have the best criteria. I'm not saying there aren't investors out there who are very successful selecting bullish trades on bottom feeding stocks that have been in decline and showed them another trend. In that case, I'm just saying that for me, for this structure, the comparisons we've done, I prefer more to look for more of a bullish chart. And let me just take a look to see if there's one in here. Something that maybe has had a recent MACD crossover within the last 3 days that's coming off of that bottom. Nope, didn't think so. Let's try 5, because we did have a strong market this week. Western Gas Partners, lower price stock, Jeez, very high volatility. Oh, it's a 29. I thought that said 21.12 for the stock. The 29 put was a 9.4% risk. That's not too bad at all. But let's take a look at that chart. Yeah, see, we can say, oh, well, here at 25 was the best time to get into this if you're doing a married put. Well, jumping above the SMA 20 and seeing the positive MACD crossover, getting in at 26 or so, a dollar or so more, not bad because it was showing me a trend. It didn't keep it, but it was starting to show the uptick from the bottom that I'd be more comfortable with. Of course, looking at this stock, it's following the industry naturally. It's following the energy and so forth. But we had this pattern here, and it looked like it was going good. Maybe got in here, and oopsies, that kind of thing happened. Here looked to be a little bit better of a run as it crossed here, maybe going up to here, handling out here. A lot of chances to do an income method number 4, hopefully getting a 1 or 6 here, being able to withstand the pullback, doing another 1 or 6 here, maybe doing another one here. We might have even been bulletproof on this trade if we were that actively trading it before this pullback recently, but it would have been done that as well. So that's just the one that had the recent crossover, but charts are charts and the trend is your friend until the trend ends. But historically, testing wise, I just found that the structures that we use and looking for that has given a better return over time.